Alright guys, it's Franz from Fractal Trading, and as you can see here we are doing systematic trend trading, and we are focusing on what is really important when it comes to long-term trading success. Just having opened my blog here, and really quickly want to show you how you can use it for your advantage. Now, every week there will be 2 to 3 updates where you can have a technical perspective, or where you get a technical perspective on the market. But I also want to show you the really important categories down here where you can find ideas on trading systems, ideas on risk management, and important concepts when it comes to the psychology of trading, where you will find a lot of people saying that this is 80% of the importance when it comes to your success. Risk management and systems are really just parameters that you have to set and keep on holding on to, not change them around due to some sort of emotion that you may have. May it be greed, or may it be some sort of frustration. Now, let's have a look at week 12 weekly recap. What has happened this week? What is important in the markets? Now, first of all, we are going to have a look at the US dollar index on a weekly time frame. Last week this was in focus, and I had mentioned before that there is an opportunity to sell this index, this currency index, into a correction. And when you have a look at the chart, the weekly chart here, you can see that from right here all the way to over here, the price had an upwards tendency, but there were many fractals being created, which simply means that you have a lot of support, a lot of resistance areas where price is really bouncing just in between. It's not really getting out of them. And even though the tendency of price is towards the upside, you can see that it made a new high, but it immediately retraced and wasn't able to really hold its high level. What you get then, as it fails after having broken through these, or this, and this fractal, excuse me, is that you get a fractal on the other side and price just runs through. Now, very strangely, this last week where you had a Friday off as it is Easter, prices came back up, and this really just tells us this really is a corrective mode. If you're short below this fractal, as price broke through that support area, you would have a tight stop somewhere in between the balance zone here. Remember, price is always looking for this balance zone again as soon as it has trended in some sort of way. Up here you can see this trend moving, and then price comes back into the balance zone, and it never is really able to leave it here. And now we just got to see how this is going to unfold. If you look down into the momentum oscillator, this should become a little bit clearer. The uptrend on this side of the market is accompanied by quite the hill, if you want, that forms, and the oscillator is never really going below the zero line, which still makes a case for upwards momentum. But as you can see, it didn't really get going again. It didn't really unfold to send price north much more to really follow a trend here. And that's partially due to the fact that momentum never really was able to breathe as much as it should have been to send price higher, and that's because the momentum oscillator never went below zero. However, here right now it is doing exactly that. So a further correction down is what logically follows as prices are now entering corrective mode, and this oscillator is really showing us that momentum is turning from the upward side to the downside and sending price now into this corrective mode. And my guess would be that we will see prices hitting this area here at their lows. They might go even lower, but we definitely see some sort of support zone between all of those fractals on this chart right here. So longs should be thinking about quitting their positions, and shorts must be very cautious, especially when you trade this market on such a high time frame. Since it's a correction, usually they can go, or not usually, but they can go down dropping like a rock, or they can just go nowhere. So make sure you're not caught up in anything that doesn't seem to be profitable after you have entered. You should definitely follow your rules and keep stops tight when you trade into this correction for maybe a bigger move, a rapid move to the downside. When you look at this chart on a weekly, on a daily time frame, you can actually see how choppy it is. All of this upwards action here, where you get thousands of fractals all the time. This again is what we saw in the weekly chart right here. And now we have a chance, ever since this high has been made, for this market to unfold to the downside just a little bit more. And when you have a look at the price action ever since it has made that top up here, you get interesting candles like right here. These candles open, they go higher, they touch all of these moving averages, which simply means there is some sort of dynamic resistance. If prices close inside of these moving averages or even above them, you are nowhere near a continuous short scenario. But in this case, price really bounced off these moving averages and closed all the way below the previous week's closes. So this really makes a case for a bearish scenario on this market, and the same is true for this candle right here. Again, it jumps up right into where prices are really looking for balance, where they want to breathe after they have trended some way, but price isn't able to stay in there. It gets sent down all the way, and then you get a new fractal here, followed by another day, and that is the 17th of March 2016 that really is going down. But the last trading week, where we again have Friday with being a holiday, you don't get a lot of action confirming this bearish scenario here. And the reason why it's kind of hard for prices to continuously and stably go down in the US dollar right now is because overall you are in a correction. The trend scenario goes kind of like this. You have a trend, you have a correction, prices are right inside of the moving averages, not moving down or up away from them. After that, you get yet another correction, another trend, followed by a correction, and now a further correction should come down here, extending the momentum to the downside, just like you saw it here. A correction will never just only have one leg or one part of it. There are always 2, 3, 4 parts of corrections, and as we see globalized markets increase in having more and more participants, what you're really ending up with is a lot of complex corrections that are very hard to define and trade out of, but you really just gotta wait. If you see the opportunity for prices running down, why not enter on this if you manage your risk, if you are able to keep your stops tight and not get caught up into some greed move. Now, when you look at the monthly chart, which is yet another higher time frame that will tell us where the market really is and where the overall trend is going, you can see that we are really just starting to end this crazy up move that has been going on ever since the mid of 2014. So being short on the weekly is really going against the trend, trading into a correction, and you gotta keep your stop tight, especially since right now we have the 26th of March and we only have 4 days left until the month is over. And as you can see in the US dollar, this month is really trying or showing signs to bounce off that green shorter term dynamic support line, and this trend line here is also violated for the first time ever since 2014. However, prices are not crashing down, so on a lower time frame you do have a chance for further correction to the downside, but you will have to keep your stops tight in case this market is actually continuing upwards. Now let's have a look. Also very nice and always mentioned by myself, this Euro US dollar market. On a monthly chart, what you can see is that this has been quite the kerfuffle to trade for a trend follower, since you get no trend whatsoever with a lot of false signals ever since 2008, the end of 2008, all the way out to 2014. So if you are a trader on this time frame, a monthly chart, which I think there are not too many people actually trading that, you do have to realize that you're not in a trending scenario, but prices are always coming back into the moving averages, into the balance zone, not really knowing where they should go next. And this situation has not ended ever since the beginning of ever since the end of 2014, where we finally saw this downtrend coming out of the correction. Now, when you look at this move, it has been awfully great to trade it on the daily chart, on the 4-hour chart, even on the weekly chart, depending on where you want to catch that trend. However, ever since the beginning of 2015, it has really been going nowhere, but it's been staying below the balance zone, below that zone where markets always want to return to breathe after they have moved so much. This market has not done that. It's like it's caught up in a smaller correction on that monthly time frame, and it's really just sitting right below that previous support zone. You have a fractal over here and more fractals right at the bottom of the correction, and this is really the support that prices have to break to continue to go down even more. And I'm now talking about continuing a move all the way down here into this previous fractal area. Now what you see here is very, very typical market behavior, that what used to be a support marked by all of these fractals is now turning into a resistance zone. You have two fractals here, and the moving averages are now marking very, very important dynamic resistance levels. It's not a land in it's not a line in the sand, but as you can see, these moving averages and these fractals are acting as very, very important resistance areas, as prices have not been able to crack them even slightly. Even slightly, they haven't been able to crack them. Now, on a weekly chart, what does this look like? You get this great move to the downside with a fractal entry right here, and possibilities to add on to your position right there. And now you are kind of looking at this consolidation. Right here, it looked like prices are ready to continue to go down. However, this low of the previous down move was never broken. So now you're still caught up in this huge sideways move, while this red line again shows us where the resistance zone is. As of now, it does not look like that this correction will be over anytime soon. It's just choppy price action without any structure that would help us to determine an end. We might see a new high above this fractal, but I really, really doubt that prices will actually get there, since this is just a correction going sideways. There are corrections that go up, down, and up even more, but I don't see any momentum developing. I don't see any harsh bulls coming into this market that really want to put the price up. You do get a couple of weeks again and again where you can see that prices are gaining some speed to the upside, but they just can't follow through. There's no follow through to really take prices higher. So in my opinion, and this is now just my opinion and nobody cares about my opinion, especially not the markets, but as long as the situation remains to be like that, I am looking for this to come down further instead of ending this downtrend and then trading up. I don't see any impulsive move after finishing off a correction, really starting a new wave or a new trend, a new impulse to the upside again in this market. So this will probably be just a waiting game, a patience game for yet another couple of weeks or months, until at the mid or end of this year we might have a chance to see this go down further. Now, this is only the scenario of right now. This may change. If next week it jumps up all the way to here, we get a little bit of a correction and then a fractal. I'm the first guy who buys this. I'm always following the market wherever it goes, but right now, if we assess the situation in the euro dollar, you can see on this monthly chart that it's not moving. On the daily, the picture is catastrophic. If you're trading inside a monthly and a weekly side move, you are completely wrong if you are expecting a trend to move anywhere. Of course, you do get some nice resistance zones marked by many fractals. If you just put a buy stop above it and then have a plan on when to exit, you're still going to make money. However, you will always get caught up into false breakouts. So a side move, an overall side move, will be a very, very hard market to trade for most people, especially if you are a trend follower. Let's have a look at gold as our final market here, starting out with a monthly chart. Unfortunately, my history is not the greatest here, but that's not so important. What we can really see, even if we are just looking at this very small historic data here, we can see that prices here were really trendy. They were really trending, and the market was hitting its high above 18 or 1900 it was. This is all the way back in 2011, and ever since that you do get a correction where the momentum is going negative and prices are going down. However, what you do not see an extensive move that is moving further out and further out and further out. Even though gold has lost quite a bit of its profits, you can see that in this zone, ever since the beginning of 2014, pretty much from here all the way to here, you do get this downwards tendency. But just like in the US dollar index, prices is not really able to move out, to move away from the balance lines, from the balance zone. Instead, it keeps bouncing back into it, and every breakout just fails because it will just bounce right back into it. And this kind of movement is always characteristic for a correction. And very interestingly, these last 3 months here, ever since the beginning of the year, you do get an increase in volatility, and prices are now looking for higher levels inside of the balance zone. And as you can see, very typical behavior, you get a rapid move up inside of the balance zone, and each and every one of those dynamic resistance lines that you see here can act as very important turning points, where markets, again, after they have moved out from its low to the high of the balance zone, they will need to breathe. The question now would be, will it make a new low? Will it continue to go down? Will it continue to be a correction? Or will we just see a retracement of this impulsive move here and then having a fractal created right here before prices are going out to make new highs? Now you can start counting waves and stuff like that, but it's always going to be subjective. Just follow wherever the market goes, and I like to do that just by trading breakouts. On a weekly chart, this situation I just described to you becomes even more clear. You get a down move here, which was profitable. You could have traded this correction of gold, but ever since then, prices just want to come back into this balance zone. And every breakout you get with tight stops, you may get some profits, but it's the typical trend following conundrum at this point, that you will have small losses over small losses over small losses until you get this market to turn around and really give you an impulse move into the new direction, where you can collect thousands of points, making more than up for all of these losses that may have occurred here. Now, depending on how good you are with technicals, you can see that there are a ton of divergences down here in this market. The market continues lower overall, but the momentum oscillator is not able to give us new momentum highs down here, and also not at this point, which indicates that there's no more steam, there's no more pressure left to the downside in this gold market. If you have a look at the daily chart, you can see that you are already very happy after having traded this trend to the upside, which is quite an extensive move. Every trend follower should have been long in this, especially as the overall time frames just showed us that they want to turn around. However, the first divergences are observable here now as well. As you can see, if we just draw some lines up here, prices are moving higher. However, the indicator is not, which kind of suggests that at some point you will get prices correcting to the next support level, which is always marked by fractals and the balance lines here for me, and the indicator, the momentum oscillator, will most likely be seen right below the zero line, going into the negative territory to really be able to breathe. And of course, this is accompanied by prices looking for the other side of the balance zone, or right the inside of the balance zone. The question will be, do we get a new down move from here, or will we just see some sort of a correction and then prices continuing up, really establishing a new trend direction on the overall time frames? You already did have a great move here. Hopefully you were able to exit your position, your long position, somewhere up here after you went long. Somewhere in this area you did get, or you did catch, quite the middle part of the trend, 70-80% of the trend, and with nice risk management or good risk management, this should help you out surviving in this market until the next great moves come. Now, as you've seen, I've also been offering some coaching sessions, and you can look at my performance right there. Please remember, this is not some day trading stuff where we get hyped up and are on cocaine all day long. I'm sorry, I don't want to offend any day trader, but in my opinion, it's the hardest way to make money in the trading world. If you do have a system and you're following long-term trends, you do have a very high probability on your side that each year, almost each year, you're making money, and you can really build a stake with that, and over time you can really make a difference in your trading account and hopefully in your financial life as well. Thanks for watching. If you have any questions, please let me know and write me an email.